This Fidelity news, as Matt mentioned, following the news from BlackRock, everybody's looking to get into the ETF rush. Does this surprise you?
Not at all. The SEC has this way of applying for an ETF. ETFs are a way for people to get exposure to a variety of different products, whether those are international equities, commodities, currencies, through this regulated vehicle in a way that's much cheaper and easier than holding the underlying. So it's natural for people to want to bring exposure to retail institutional masses through the ETF process. Now, of course, this is a good opportunity following BlackRock applying for their ETF to try to throw the hat in the ring as well and figure out if they can get over the hurdle that the SEC has placed for them since the first, wave of rejections have happened in the past couple years.
And how much does the situation with FTX itself play a role in the fact that it has felt like a bit of a roller coaster, right?
Sure.
A crypto crackdown, and now within the last few weeks, all of these ETF applications, which sort of builds this story once again of momentum.
So, ETFs were getting rejected, for a spot Bitcoin ETF prior to the FTX collapse. Of course, post-collapse, it caused a tremendous amount of damage of credibility for the crypto industry in Washington and just, across the financial services sector in general. I think now people are starting to emerge again, not just because, the price of Bitcoin is going up, but because people are seeing if we're going to create regulated vehicles, regulated exchanges, properly surveilled places for people to be able to trade this asset, we should start doing this again. And so that's where you see all these traditional players like Fidelity, BlackRock, throw their hat in the ring for this.
I want to get to your young firm, Architect Financials, Brett, which is fascinating because, well, for many reasons, but also because of your use of AI. But before we get there, to wrap up the idea of a spot Bitcoin ETF, I spoke with a former SEC lawyer a couple of weeks ago who said, in his mind, one of the biggest problems is volatility and settlement. Do you think that that's an easy one to solve, especially for gigantic firms like the $10 trillion BlackRock?
I do think they can solve that problem. And remember, think about all of the other ETFs, ETNs that are out there right now. You have the double long leveraged VIX ETN. You have ETFs on, for example, corporate bonds that are extremely illiquid. You have ETFs on foreign stocks. And so having, the Bitcoin market, which is, a $1 trillion, total market for all of crypto, I think that these companies can figure out how to do proper settlement, that they can do surveillance of the exchanges in a way that will satisfy regulators in a way that will ultimately protect the investors who will get this much better way of getting exposure to the underlying product.
All right, with that behind us, because I think it was a very cool story to drop this hour, and you have a background in ETFs and crypto, so it was a perfect timing. Let's get to Architect, which is the firm that you recently founded. And even before this wave of AI fascination, you already had planned on using AI to help institutions trade crypto. Explain to us how it works.
So, the intersection of AI and financial services is a very exciting area. When you think about what something like GPT is very good at, it's great at taking natural language instructions and parsing those and creating sort of an interactive dialogue with the user to help them solve a task. So it could be, yes, finding restaurant recommendations, or it could be coding up a project. Well, in the financial services sector, especially for what we're building with Architect, which is trading software, we are trying to help people be able to create automated trading systems, to create trading strategies in a way that's a lot easier than needing to know how to, for example, code completely from scratch or have years of experience within some secretive proprietary trading firm. So that's what we're working on at Architect, is being able to use AI and all of the connections that we're building to various exchanges, not just for digital assets, but for regulated derivatives as well, to let people make these strategies easily using AI.
It's interesting. We were referencing, you were just at this large tech conference here in Toronto, Collision, where it's AI all the time. Everybody's been working in their own silos in a year where this has become such a story of excitement. To see all that energy at one place, did it almost make you feel validated in what you've been doing?
Yes, and on the other hand, I think one thing that's important for us is that we are taking the long view on what we're building. We're not just going to follow the hype cycle, and we're not pivoting to become an AI company here. We are a financial services company. We're a financial technology company. We believe in the long-term prospects for digital assets. Of course, we believe in all emerging technologies helping investors in the long run, whether that's blockchain or AI, and we want to use our skills in the areas of programming and in finance and market structure to be able to help investors.
Is it, Brett, a software as a service play? I mean, you're not doing any kind of actual crypto trading. You don't have a platform that custodies any assets, right? You're just looking to help institutions that want to be able to play in this market.
Right now, we are a pure software company, and so our product, we deliver a software bundle to the customer. They install it on their own servers, on their own hardware, to allow them to have much easier connectivity to exchanges, to be able to manage their portfolios, to be able to see their balances, to be able to create algos for trading. And in the future, we plan on possibly getting into the brokerage services by applying for licenses in the US and possibly other jurisdictions. But for now, we are a pure software market.
Okay. Speaking of trading activity, you were just fielding some of our questions on that Bitcoin ETF news from Fidelity. The Bloomberg team was noting that the cryptocurrency has yet to surpass its recent June high, even with this news out there. What would you say, what's been your observation of Bitcoin trading of late?
I think a lot of the recent price action has to do with general optimism that institutional players are finally now entering the space. They're looking at the recent turmoil in the markets as an opportunity to come in as established players and build these regulated environments for trading. And I think we're going to see that continue. I also think there's a tremendous amount of optimism from other jurisdictions like Hong Kong, Singapore, Japan, where they're rolling out rules to make it easier and safer to be able to trade this asset class. And I think over the long run, we will see the price track.
Is there any other overhang that you're watching to fall away, Brett? I mean, this Bitcoin ETF really highlights, I think, the institutional interest, right? And that optimism, as John pointed out, MLive has been writing that it's already kind of baked in there, which is why the price is holding steady at 30,000. Is there anything else that the crypto community is looking for to get another leg up on the Bitcoin price?
I think the community is looking to see volumes return, especially in the US. I mean, again, post the SEC crackdown, for example, their complaint against Coinbase. Generally speaking, the volumes have really dropped in the US. A lot of large proprietary trading firms, market makers, have pulled out of the crypto markets. And so with that depression of liquidity, I think that's really holding back price. I think these different new exchanges that are coming online, for example, EDX is just one of them, but for example, Cboe Digital recently got margin approval for their futures exchange. There are other exchanges that are trying to become regulated spot commodities platforms for things like Bitcoin and Ether. If those can really pick up and bring institutional liquidity back, I think that will help a lot.